Rishi Kohli, who's CEO at ProAlpha Capital, joins in our studios to talk about his outlook for 2019. Rishi, it's great to have you in the show. Thanks very much for taking out the time. We are really counting down to the interim budget and the expectations thereof. What is it that you think the market is penciling in with regards to what may happen with the macro event?
So, run up to the budget has been positive many times in the past few years, and this time looks like no exception to that. In the near run, the technical patterns that are formed on the Nifty, Bank Nifty indices points to a bit more upside in the near term. Last time on the show, I had mentioned that Nifty looks like it could go to 11,250 or so. Right now, it's been struggling to cross the 10,950, 11,000 levels. We are about there even today. And but the way the triangle pattern has formed, and then it's hitting on the upside multiple times, it looks like it'll break out soon. And that combined with the upcoming budget and seasonality around that looks like a higher probability of that to happen soon.
Rishi, what are you making of this strong move in Reliance? I mean, 100 rupee move in just the last 2 trading sessions. The fact that digital as well as retail is going to post in good EBIT, and the oil and gas business is going to be at best in line, was something which, one would assume was already in the price. Why this fresh enthusiasm on Reliance then?
So, Reliance, we've seen this many times that in the run-up to the results, one thing happens, and then post-results, that pent-up buying or selling continues to happen. So this time, I think the stock had consolidated for a bit, and overall things being minorly positive on the results front, I think has led to this fresh up move. And technically, again, it looks like it should head back to previous highs, which are about $100 from here, or maybe slightly lesser now given today's move. So that should happen, but how it handles that region combined with how further quarters shape up will give rise to whether it's a long-term trend or not.
Let's talk about the portfolio. I haven't spoken to you in a while, but I remember a couple of months ago when we spoke, there was iShares and Lupin in that portfolio.
Right.
Are they still there in that portfolio?
Yes. Yes.
iShares still?
Yes.
How much money you've lost in that?
So yes, iShares is down, I think, about 15-20% from the last time that you're mentioning. So obviously there's been disappointment in the stock due to lower sales coming in, margins tapering off a bit, plant shutdown, strike. So a lot of negative news on all fronts. And obviously, it was trading at high PE multiples. The September-October decline in markets especially had a hard hit on the high PE stocks. So the price behavior is not that out of line with how all these news has developed. But having said that, I mean, the underlying fundamentals and the underlying things at the company level still continue to be positive. Because there are some new launches happening, there's some new capacity coming up. So all of that, as it fructifies into whatever further developments are there, I think should give a fillip to the stock bouncing back. And currently, from a technical standpoint, 20,000, that those kind of levels are very, very strong supports. So ideally, I mean, it could go into a slight sideways patch before really shooting high like past few years. But I think from 20,000, a bounce till 24,000 or so is easily possible. And one should at least wait till there and see what further developments are happening before taking a call to either trim or add or something like that.
Where else do you believe that we could see negative surprises in the earnings season? If you just look at it prima facie, the trend the last 2-3 months, that two-wheelers is not really going to hit a home run when it comes to earnings. But would you believe that, be it a Hero MotoCorp, be it a Bajaj or a TVS for that matter, the negative is already baked in the price?
I would largely think so, yes. I mean, two-wheelers, even a lot of the four-wheelers like Maruti and all have also been disappointing for a long time. Tata Motors has had its own issues. A lot of these, I think, are interesting plays more from a value and a long-term perspective, because finally some of these are growth stocks, but have disappointed on that and therefore taken the hit. but the underlying very strong fundamental thesis on which they have grown over time has not really changed. There are things which obviously have upset the move for 1 or 2 years here or there. So it's largely a similarity in a lot of fronts across these kind of stocks.
GHCL, that's Gujarat Heavy Chemicals, numbers have come out. Revenue 870 versus 718. And on the PAT front, there seems to be substantial uptick. Then textile business, then chemical business, they are largely in soda ash. That's a business where, that's a compound which largely is used in the soap industry. And textile businesses where there has been some degree of volatility. You'll have to look at the breakup, but prima facie, the numbers, what agencies are reporting, they look strong. Now for the very latest on this entire Sun Pharma governance saga, let's go to Jayesh and he's going to fill us with some fresh details.
Nikunj, let's first recap what happened on Friday, that the stock was down intraday about 13% before it closed 8% lower. Now we understand that there was a second whistleblower article that was published, and it actually alleged that the Aditya Medisales Limited had transactions of nearly 6,000 odd crores with Suraksha Realty, which is controlled by co-promoter Sudhir Walia. Now post market hours, there was another development from the end of Sun Pharma, because they have actually written to SEBI, asking SEBI to investigate the entire matter, because the whistleblower documents are being offered only to the institutional investors. So there is some foul play that they suspect, and they have also requested SEBI to examine such media reports and other stakeholders. But this was, definitely this has created shareholder value destruction, which was clearly visible in terms of the delivery volume. If you have a look at the Friday's delivery volume, that was the second highest number that we have seen in this entire year, because there were about 2.5 crore shares that actually were marked as delivery out of the 9 crore shares that were total traded. On 3rd of December 2018 also, we saw that the stock was down about 7.5%, wherein once again the delivery volume was nearly 2.75 crore shares out of the total volume of about 6.63 crore shares that were actually traded. So significant shareholder value destruction has definitely happened on the back of this delivery volume that we have seen.
Excruciating pain on Sun Pharma, and today you're seeing a bit of a temporary respite on that note. Okay, let's move forward. Let's talk about what's going on with Shree Infra now that the demerger is in place, and of course you heard it first in ET Now. Poonam, walk us through all the details.
Well, that's right. In fact, Aisha, in terms of the Shree Infra Finance, we're seeing that they've gone ahead and demerged Shree Equipment Finance first into their other wholly owned subsidiary, which is Shree Asset. And the second level of the demerger is that all the businesses of the equipment finance, the leasing business, the lease and rental business, all these business are now going and being a part of the Shree Asset business, and Shree Asset shareholders would in fact the shareholders of Shree Infra Finance in fact would be getting shares of Shree Asset in proportion to the holding that they have in terms of Shree Infra. In fact, the Shree Infra as an entity would now go ahead and be listed after the entire demerger exercise is completed. There is no cash involvement in this entire business. It's entirely a share swap kind of a deal there. We also understand that in terms of the overall dynamics, it would slightly be better in the overall scheme of arrangement. To my understanding is that Shree Equipment Finance would indirectly get listed, and probably it will help the management in terms of looking at Shree Equipment Finance separately, as well as the overall infra finance business of Shree Infra would remain into the parent company, which is the Shree Infra Finance. In fact, if we look at the overall value unlocking also, it seems to be that it should be overall good. 10 shares of Shree Asset would be issued for every 21 shares in Shree Equipment Finance, and 1 share of Shree Asset would be issued for every 5 shares in Shree Infra. We'll have to go ahead and get hold of an analyst to understand what is the entire valuation and extra in terms of the deal. But so far, what we understand is, yes, some amount of value unlocking there probably, because Shree Infra Finance Management was in fact trying to do an IPO of Shree Equipment Finance since quite some time, but that did not happen, and it's been a couple of years that they were trying to do that. So we'll have to wait and watch out for the management commentary on the same as well. But as of now, Shree Infra Finance, the stock is up nearly around 5 to 6% in today's trade post this news, and it was my colleague Ajay who did broke the story early in the morning, and I guess that's a good one that we have got as an ET Now exclusive.
Thanks a lot for that. You've got a lot of problem stocks in the market. We may be nearing 11,000 in the Nifty, but if you invested in Sun Pharma, it's feeling like a bear market. Similarly, if you invested in Jet Airways, it's been a volatile market. If you have exposure to Yes Bank, then you are just hoping and hoping and hoping that one day or soon you will get a sense as to who would be succeeding Rana Kapoor. Rishi, Sun Pharma, Yes Bank, Jet Airways, will you buy any of them?
I wouldn't.
Why? If you wait for Robin Spring, is going to be over.
Yeah, no, so which is why some of the other stocks which so far have been underperformers in my portfolio are still there, because the underlying themes for which they were bought, have not been disturbed too much beyond a point. So that's
why have you bought Sterlite Tech? Because my understanding is that prices of broadband, the fiber which they make, they've collapsed 30% internationally,
right,
and there is a problem with the China telecom order, right? So the thesis for Sterlite Tech is broken, according to me.
See, Sterlite Tech, I mean, there's a very large data network opportunity that is there. They're one of the only ones placed for it. The order book remains high. It's 2x of current year revenues. Currently, long-term ROCs are moving higher or already high. So a business which could sustain, greater than 25-30% ROCs, high ROEs, reasonable earnings growth, like FY20 profits could be double of FY18 despite some of these hiccups. Are you accounting
for the decline? Are you accounting for that cancellation of China order? Because we've not spoken to the management.
Right.
They're admitting that there is a decline. I don't have the numbers now. They've not changed the guidance. Numbers, I think, are due later this week.
Right.
But in your conviction to buy Sterlite Tech, are you accounting for this virtual 30-35% drop?
Yes.
Okay.
So we are doing that. Like I said, I mean, if we are expecting some of these profits and earnings numbers to almost double, and if I adjust for this a little bit as well, but there are other positives also coming in terms of the underlying tailwinds in the industry, then I think largely, I mean, they may be 10% here or there, but it will still amount to some very good numbers. And technically, again, it's at the bottom of very long-term supports are there. It's at a lot of different channel and pattern supports. So that also gives additional comfort, because it's basically low risk, high reward.
Rishi, is there trade in IT? Infosys has done exceptionally well, but TCS has done extremely poorly.
Right. And I mean, that's sort of a mean reversion happening from last year, because I mean, TCS had done very well and Infosys had not, and a lot of people looking at relative value trades. This was an attractive trade to get out of TCS and get into Infosys, which I just started playing out now. But having said that, within the IT sector, I had introduced Tech Mahindra in the portfolio last show, I think, and I would bet more on that because it's sort of cheaper than most other stocks in the sector. The the underlying segments, telecom, enterprise, some of those things which were dampened for many years have started turning around. So numbers have started coming in, and on the price charts, it's breaking out, on the verge of a breakout. I mean, it's again hitting resistances so many times and consolidating around there that it's virtually sure to break out. So that would, I think, give relatively better returns over the next year. It could easily give you a 30-40% kind of return over the next year. Whereas Infosys, from a long-term channel perspective on technicals, it's at the higher end of the long-term channels that it typically trades in. So I think apart from some short-term bounces here and there, it would end up giving a bit of a struggle in the 6-month to 1-year perspective. So I would bet on Tech Mahindra really.
Okay. Good to have you on the show, Rishi.
Thank you.
Thanks so much for taking the time out and joining in.